Wall Street winners, it is Friday, March the 7th, and we're in for an interesting day today in the markets. What we saw at 8:30 today was that both the US and Canada came out with a stronger than expected employment or jobs numbers, meaning that more people gained employment in the last month. And the challenge with that is it means on the positive side that the economy is strong and resilient. On the negative side, it means that it may be more difficult to push that inflation number back down to 2%, which is what the Federal Reserve banks of the different countries in the world are trying to do, or at least the G7 countries. So when we look into where we are today, crude is off a little pre-market. You're seeing that there are there's a little bit of green on the screen with crude, but if we look down at crude as it sits, it's minus 27 cents, so in the mid $78 range. Crude did very well, as you can see yesterday. I mean, some of our faves here, SLB, it's close to $51. That was down in the low 48, 47 range within the last 2 weeks. MRO, Marathon Oil, had good results last week, and it's going to be pushing the $25 range, and it's been hovering between 20 and 23. CVE broke through 24. It kind of stalled out yesterday and lost 2 cents at the end of the day, but that's something that is likely to probably push up further, maybe get to $24.50, $25 in the next week or so. Valero almost hit 150. So there's a few of these that are kind of going north, and it's a little suspect. Earlier today, pre-market, Consolidated Edison was up $2.12 pre-market. It's now at even. To see that a utility stock jump 2% at open is very, very unusual. It can happen, obviously, but unusual. Now it's kind of corrected and it's gone back down. You saw it started high yesterday and then ended the day pretty much on par. It was 9 cents above where it opened. The tech sector is still extremely hot. You'll notice as we scroll down that semis are, again, really carrying the market and lifting all boats in the water. Palo Alto, it made some progress yesterday. I think this is going to continue to trend upwards into the low 300s, and then within 3 to 6 months, probably get back to the 400 range. Cloudflare is doing well. It was in the high 90s. Now it's almost 101. You can see some of the other things. So this is one of the things I wanted to point out today, and it's about ETFs, or exchange-traded funds, which are a collection of stocks. It could be an index. They're made up in different ways, but some of the ones that I follow that allow you to invest into a bucket of technology stocks, not a single stock, which is more risk-averse. So you're getting a more balanced strategy. If everything in that sector goes up, you'll likely do pretty well. But if one out of, say, 10 stocks plummets, you're not going to have as much exposure. So the AIQ is an interesting ETF for AI-related stocks. And another one that's very popular is Invesco's QQQ Trust. And then there's also VGT from Vanguard. So those are stocks those are funds with low management fees that you can buy into that allow you to get into the market and participate in, well, the upside and the downside potentially, but definitely allow you to participate in the upside without single stock exposure. So if you're someone who's putting in, let's say, under $100,000 to start in your investment portfolio, investing in ETFs is probably a very smart strategy. They're kind of like the new mutual fund. Mutual funds have gone out of favor in the eyes of many investors, and primarily due to what were at the time higher management fees. So those are the fees that you pay the people to actively trade the stocks within a mutual fund, and all of the administrative costs that go along with managing that fund. They've become, in many cases, too expensive, and you were giving up, let's say, 1.5% to 2%, sometimes higher. So you'd automatically be losing money at the beginning of the year and have to make that 2% just to break even. Now, a lot of them did. but it's not guaranteed. It's not like a GIC. So the ETFs came on board years ago, and that's when a lot of more savvy investors initially, and then the general public kind of switched over to those. So if you are looking for an entry point and you don't have a significant amount of capital to invest, then the ETFs are definitely an excellent strategy and an excellent approach. If we continue down with the individual stock basis, here we can see AMD's on a bit of a tear recently. You've got Workday, which is down and off, but due for a rebound. Lam Research has been and continues to do very well. If we go down and look at Meta is into the low 500s. So definitely a phenomenal company from a revenue and financial perspective. There may be some disagreement on how great a company it is to the general population and the good of the world, but from a financial and Wall Street perspective, it's a phenomenal company. BABA is kind of hovering in the low 70s, hoping for that to jump up to the 80s. Pre-market, you can see NVDA is just, again, going crazy, up 39 bucks yesterday, almost 40. It's up 25 pre-market today. So this is just a rocket ship that continues to propel into outer space. And then Google made some progress yesterday and a bit of a comeback, up almost $3, 2.5 to 35.24. Adobe made some good progress back, and Adobe is announcing earnings next week. So we're 6 days away from earnings. So you'll see that come up next week, and I do believe that they're going to have good earnings, and that should cause that stock to pop. I would anticipate within the next 2 weeks that Adobe will be north of 600. That would be what I'm kind of forecasting and planning for based on where it's been, but that is just a guesstimate. There's no factual evidence to prove or support that. And then we get into financials, and financials are just kind of sitting there right now. It's almost as if there is something waiting in the bushes to be uncovered or revealed with financials that could cause them to have another pullback similar to last March when we saw a couple of the smaller regional banks collapse. We've seen it recently with New York City Community Bank. We may see it with others, especially as interest rates continue to hold at the levels they're at. So I'm a little leery of this sector, except if they're the big name stocks like JP Morgan and Goldman and Morgan Stanley, and then some of the bigger Canadian names. But that's where we are today, and I wish you all the best in your trade.